the world looks at us as being hypocritical and tyrannical and doing things with force and sanctions rather than cooperation, the way the BRICS do. And so I think that these countries say to themselves, not only are they very concerned about the way we are handling our ever increasing debt binge and addiction to spending and wondering, well, at what point does the rubber meet the road and that debt no longer become attractive to the world? And maybe we should start to pare down our exposure to it. That's part of it. But I think that they realize what gold represents, in fact, is an asset that has outperformed the bond market for the past 25 years tremendously, largely, averaging almost 8% per year on average for the last 24 years, as the bond market has averaged maybe a third of that or less with the low interest rates of the last 10 plus years. But it does not have the counterparty risk of sanctioning, of confiscation, of default.
In a recent interview, financial expert Andy Schectman sheds light on the evolving dynamics of the global economy. Highlighting BRICS' meticulous approach, Schectman discusses their plans for a new payment system based on blockchain, incorporating local currencies and commodities. He suggests a potential surge in gold demand amidst concerns over escalating debt and geopolitical tensions. With gold outperforming bonds, averaging nearly 8% annually over the past 24 years, investors are eyeing it as a hedge against counterparty risks.
I think we're going to start to see many developments that are going to begin to materialize in a very substantive way between now and October. We were told that there would be 200 meetings in Russia, all of them dealing with BRICS agenda. And we're beginning to see that unfold. And there was something that caught my attention that I wanted to mention. I think it's very important to understand that the BRICS have been doing things in a methodical fashion, and they have been laying the foundation in a way that frustrates a lot of people on this side of the pond, because we are obsessed with instant gratification, and typically that's not fast enough. And it really manifested itself last year in August, when the BRICS did not come out and issue a common settlement currency. In fact, they tasked all of the finance ministers to go back to the drawing board and present their findings at the meeting in October. So what we just saw the other day is an interview that was done on Sputnik and on the Russian news agency TASS. Oftentimes when I'm looking for information on the BRICS, I have to dig and go to places that are not mainstream, and you have to search on internet sites around the globe. But the gist of it is that they have publicly said that they intend to develop a new payment system based on blockchain. And we've known that. We've been told that, right? But the interesting thing is that I believe the interview was with Sergei Lavrov, and he's one of the finance ministers that has been telling us for a couple of years now that this new system would be a combination of local currencies, i.e. those currencies in the BRICS, like the yuan or the real or the rupee or the ruble, those currencies representing the local currencies, and a basket of commodities. So I wanted just to read you a couple excerpts from this interview, because I think it's going to open people's eyes quite a bit and set the stage for what I think will be a massive run on gold. And, you know, people are noticing, obviously, the price of gold take off. And it's been my belief that over the last several months, a large portion of the run in gold, which has in many respects kind of caught the investing public asleep at the switch, if you will, as premiums have been ridiculously low, as we've documented very well over the last 6 months or so, and the availability as good as it's been in years. But I want you to understand that what I believe is happening is that many of the large purchasers of our U.S. Treasury debt, foreign governments, have been shedding and not continuing to purchase debt, in fact, not rolling it over and letting it expire, and taking that cash and purchasing gold. And I've talked a lot about that recently, and how gold has no counterparty risk. It doesn't have the risk of sanctioning. And in the case of Janet Yellen gallivanting off to Brazil in Russia's backyard, i.e. a charter member of BRICS, publicly saying, look, we need to confiscate these assets that we've frozen, the $380 billion in Forex reserves that we've frozen and sanctioned. Now we need to confiscate them. And to take the extraordinary step of crossing that Rubicon and confiscating another nation's assets when the rest of the world looks at us as being hypocritical. We've talked about the way we've handled ourselves in Iraq and the punitive measures we still have in place 20 years after invading them against 14 of their banks and against holding all of their oil revenue, which we don't give them access to. And so much of the world looks at us as being hypocritical and tyrannical and doing things with force and sanctions rather than cooperation, the way the BRICS do. And so I think that these countries say to themselves, not only are they very concerned about the way we are handling our ever increasing debt binge and addiction to spending and wondering, well, at what point does the rubber meet the road and that debt no longer become attractive to the world? And maybe we should start to pare down our exposure to it. That's part of it. But I think that they realize what gold represents, in fact, is an asset that has outperformed the bond market for the past 25 years tremendously, largely, averaging almost 8% per year on average for the last 24 years, as the bond market has averaged maybe a third of that or less with the low interest rates of the last 10 plus years. But it does not have the counterparty risk of sanctioning, of confiscation, of default.
In the next discussion, Andy Schectman discusses the BRICS' strategic moves to reshape global finance. Highlighting flaws in the Western price-setting mechanism, Schectman emphasizes BRICS' understanding of market manipulation and their plans for a new currency backed by national currencies and commodities. By developing alternative payment systems like SIP and mBridge, they aim to assert control over price formation, distancing from Western exchanges. Schectman warns this shift favors central banks accumulating gold as a Tier 1 reserve asset.
And so I think what you're seeing is central bank purchasing really pushing up gold. But I want to read to you something, and I think you'll find it very interesting, because to me, it really shines a light upon the fact that they understand what's going on. They being the BRICS, they understand that the Western price setting mechanism is flawed. It is manipulated, that the price of gold and silver should be much higher, not just the price of gold and silver. Remember, we talked about the fact that a few years ago, China bought the LME, the London Metals Exchange, which deals primarily in base metals. I think they do some precious metals, but mostly copper and steel and zinc and lead and those kinds of things. They're now going to be warehousing those metals in China and listing those contracts on the LME, owned by the Chinese. The Chinese are very shrewd, and the BRICS are very shrewd, and what they are doing is making a play on all of the world's commodities, both soft, hard, and precious. They're accumulating the soybeans and the corn and the wheat. In fact, as a side note, BRICS has just floated the idea of a new grain exchange, where global prices are primarily determined by the Chicago Commodity Exchange, the COMEX. These countries who produce as much or more grain than the West does wants to be free from the price setting mechanism. And that's what we're going to talk about here in one quick second. But I want people to understand that they understand what's going on. And the reason that they are not throwing a fit is because it falls right into their hands, or playing right into their game. And that is to use the suppression of the Western markets, the manipulation of the markets that, I guess, in the West's eyes, support a narrative of strength of dollar, strength of economy, and strength of bond market, which we all know are illusionary. But here's a couple of excerpts from the interview that I think people need to really pay attention to, especially when I get to the third part. The first thing they want that he talked about is that the idea of this new currency that he just floated would be two baskets. One basket is national currencies of all countries involved in the process, like the SDR, the special drawing rights issued by the International Monetary Fund, a grouping of currencies of those countries that are part of the fund, but with more clear and understandable criteria, he says. B, the second basket would be commodities. If you have two baskets and we create the new currency as an index of commodities and national currencies, we have a mechanism for reserves according to the mathematical model that will be stable, very stable and very convenient. So what he's saying is, first of all, this new currency will have two baskets. It will have a basket of all of these local currencies plus a basket of commodities that each of these countries will pledge to the system. And here's where you find a marriage between blockchain or distributed ledger technology and all of the assets pledged to the new system. So that's we knew that was coming, and they said it should be in a digital form so it can be used without the banking system, so it will be at least 10 times cheaper than the present transactions through the banks and the currency exchanges, and namely the SWIFT system. So they understand all of this, and they understand that it is a SWIFT system that needs to be avoided. And there are two different payment systems that have already been tested and working. One is the SIPS system that China invented, I guess you could say, and has used successfully, the cross-inter bank payment system. And another one is a similar acronym that Russia has. So they have the ability already to trade and without using the SWIFT system. But this digital platform will use the technology of the Project M Bridge. The Project M Bridge was the cross-border payment system that was developed by China, and I want to say Singapore, the United Arab Emirates, where you are able to trade central bank digital currencies that these countries already have operational with one another, again, outside of the SWIFT system. We know all of that, right? But here's the part that I thought was fascinating, and I want people to understand this is the long game, and they know what they are doing. He says the second part is for price. For the moment, price is determined by Western speculation. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. During the COVID pandemic, the price of oil fell to nearly zero. Actually, it was negative $40 a barrel, if you remember. It's impossible to make any strategic planning for economic development if you not control the prices of basic commodities. Price formation with this new currency should get rid of the Western exchanges of commodities. And I've been saying that for a year, that they know that, and this is going to happen, that they have been using the suppression of the Western markets against us. Who's been buying all of the gold? Oh, yeah, it's the central banks around the world. What is gold? It's the only other tier one reserve asset as reclassified by the Bank of International Settlements. China has bought for 14 straight months in a row. All of these countries are buying commodities, whether they be soft, like grains and soybeans and wheat, or base metals like copper and zinc and aluminum and lead, or the precious metals. And they have been using the suppression of the COMEX markets across the board, which the COMEX is allowing for some strange reason to support this Western narrative. And they know this, and they are using it against us.
In today's discussion, we delved into the strategic maneuvers of the BRICS nations and their impact on global finance. From plans for a new blockchain-based payment system to the reshaping of commodity exchanges, it's evident that significant shifts are underway. Central to these developments is the recognition of flaws in the Western price-setting mechanism and the increasing prominence of gold as a reserve asset. We've covered a lot, but there's even more to explore. Thank you for tuning in. Don't forget to subscribe for more insightful discussions like this video, and share your thoughts in the comments below.